All right, welcome back to the program. My guest is joining me right now, Uchenna Minnis, who is the managing partner at Minnis Asset Management Limited. Hello, Uchenna, and welcome to the program.
Thank you, Nancy. Thank you for having me.
Let's get started. The NGS equities performance, at least week on week, no, not even week on week, year to date, I must say, is the worst performing among its African peers. Just like I said earlier, the Nigerian equities market, talking about the year-to-date performance in the range of 3%. We've seen South Africa high, Egypt high, as well as Kenya. What would you say is the trigger for this weakness?
Well, I think it's quite clear that the general investment appetite in the core Nigerian financial instrument is basically quite low. There's a number of a degree of pessimism really among market participants and investors, and I think that can be likened to the fact that the current situation with our currency against the dollar is really not giving the confidence that we will get across the investment, should I say, circle. We've seen oil prices perform significantly all through the year, and still, which should normally translate to market optimism or investment optimism, but that's not the case because we are really getting a significant blowback when it comes to our narrow play against the USD, and I think that's sort of weakened investment appetite generally speaking.
If we take a look at last week, we experienced sell-offs among tier one banking counters. Just like I said during the market analysis, we saw that the much-awaited Stanbic as well as GTCO were released. What are your sentiments towards these banking counters?
No, I don't think when it comes to our banking sector, because actually the financials are actually quite one of our strongholds really. And if you go back into the pandemic time and just when we had a lockdown, you could see the banking sector were still looking to perform, given the fact that they are sort of considered as essential. So whatever weakness we see on the banking sector, I would think it's just temporary. It has really, it's not a long-lasting effect really when it comes to their prices really. So I think going into this coming quarter, where we see a bit of reallocation of funds, I expect that we should get some sort of positive earnings and bullishness in these stocks.
Let's still stick with the banks a bit and talk about the earnings that we've seen, the earnings of these banks. Which ones are impressive for you and which ones are unimpressive?
So for when it comes to the banking, the tier one banks are always going to ride in the front line. Actually, I'm also paying attention to Fidelity really, given the fact that they're looking quite, they show some level of healthiness in terms of their books really, and they are resulting from the beginning of this into this year. And I think with their new, should I say, management steering wheel, there's some sort of impressive ideas they are looking to implement going forward. Another thing you should also look at with the Nigerian banking sector, they are not necessarily just sitting down. They're not literally just being in that their bubble of just banking. They're looking to create investment products, also try to should I say align with this the fintech industry really, just to move ahead with the times. And I think on the basis of that, we should get to see overall healthiness when it comes to this the banking sector really. So yes, I'm expecting some positivity going forward when it comes to this sector.
Okay. For you, Uchenna, do you think that the fundamentals are still very strong for the banks? Since we're talking about the banks.
Yes, so as I said, right, the way our macroeconomic dynamics is sort of structured, really. I can say in a way there's some sort of let me not use cartel, let's say there's some sort of cliche or some sort of niche really for the banking sectors. So irrespective of how our general macro fundamentals might be weakening, there is this sort of bubble that is sort of resistant to a large extent across the banking sector. So I can say from a macro fundamental, just given our general weakness in our fundamentals, from a micro perspective, you expect the bank to still come out on top. And I think that is how we have our structure. That's how our dynamic has sort of set itself up when it comes to these banks and the general economy at large.
Do you see an upward repricing of equity instruments in the banking space, especially if we take a look at last week? Some sell-offs in that banking counters did not, offset. Yes. Do you see an upward repricing of banking stocks?
Yes, I think so. I think we should expect a near-term rebound in banking stock. I don't have any worry in that aspect when it comes to. I just think in some way there's some sort of fortress, that have been built across the sector, really, and I think when it comes to the regulatory aspect of it, the Central Bank of Nigeria is literally ahead in terms of seeing. So what I'm referring to is that in case we are getting some sort of default or liquidation crisis, really, I think we have a central bank that will always step in and mitigate such risks, like we saw with Skybank and Polo, really. So for me, I think the banking sector are still going to be the stronghold. They are still going to be those that, should I say, flag bearer when it comes to some sort of bullishness when it comes to the equity side of things in the country.
We just got to stick with these banks a little bit because so much has come out, at least in the last few days or few weeks, about banking banks and the banking stock. So let me stick with it a bit. The much-awaited GTCO as well as Stanbic Holdings first half 2021 audited financials have come out. And quite interesting, when I was taking a look at that, we saw the EPS moderation, earnings per share moderation of GTCO at 15.7%, Stanbic IBTC Holdings at 50.1% year on year. But for the gross earnings of GTCO, which is the holdings, it dropped about 25%. But GTCO also declared an interim dividend of 30 kobo per share for its shareholders, while Stanbic shared 26% in gross earnings. But UB, on the other hand, witnessed a year-on-year growth of 36.3% and declared an interim dividend of 20 kobo. So 20 kobo dividend from UBA. GTCO declared an interim dividend of 30 kobo per share. What are your sentiments towards this? And how do the market, of course, we've seen the market reaction, but how are market analysts taking this and what kind of news is this generating?
Yeah, so we saw the reaction given this result in just taking the time to sort of spell out. We saw the market react to that, and instead of just taking the risk, this is just a temporary glitch. The way our banks are set up, there is always going to be a strong comeback. So, and I believe market analysts and even investors at large should understand the sentiment. Our financial, the banking sector in the country are sort of put themselves in some sort of strong strength circle, let me put it that way. And in that regard, if we get to see continuous weakness for any reason, we continue to see continuous weakness in terms of their micro fundamentals and their books really, and report their earnings and whatnot, then we now need to start to worry that even the general weakness in the macro fundamentals are started to now fit into the banking sector that's supposed to be like that flag bearer, that strong, what we refer to as defensive in our context right now in the country. So when we get to see that continuous sustainability in terms of weakness, then we now need to start worrying. Then we'll probably now to see significant portfolio reallocation out of our equities, out of our fixed income space, because now foreign investors are saying, okay, I think this country is going into significant crisis. And that is when I think we
let's talk about the consumer goods sectors. Which stocks specifically are investors gravitating to in the consumer goods sector? Which stocks are investors liking?
No, so the brewery sector, Nigerian breweries, for example, try not to mention so much name, but again, the brewery sectors are looking quite palatable. You can see, given the fact that we're just coming into, I think we're getting to in this country, really, I will have to speak to this in this country, we're getting to that level of increased consumer activity and business activities, really, pre-COVID level. So on the basis of that, you're seeing a lot of consumer activity in that regard when it comes to this brewery sector. I also think a strong play has also been pushed into the casual beverage sector too. We're seeing Nestle also see some sort of significant uptick too. We're expecting to see that. So I think generally speaking, given the fact that we're at this point where consumer activity is sort of shooting up and getting to be increased, we're seeing that the consumer sector really kicking it, and I think is another place that investors are looking at. But again, when you start to break down to understand the supply chain of these companies, you realize that they are highly dependent on effect supply. And when you start to look at that negative feedback look, and you realize what is really happening in terms of your access to this effect, and at the same time the cost at which they can get this effect, you see that also has that bottom line effect or negative bottom line effect in your books, really. So investors are quite happy that okay, we're getting to this point where we're seeing increased customer activity and business activity pre-COVID level. However, given the depreciation value of the naira against the dollar, there is not that counterproductive effect when it comes to these companies and how they really produce their goods. So we're seeing inflationary pressure driving significantly across board when it comes to this produced goods. So it is now a thing of trying to choose between the hard place and the rock, and I think that's where the predicament that investors and market partners are currently facing right now.
Uchenna, if we take a look at what has happened so far this year, the month of September, from January till now, the equities market specifically, year-to-date performance in a negative territory, over 3%. I want to gauge your sentiment. Are you a hawk or are you a dove in terms of whether you are underweight or overweight from the short to near term, especially as we round up the year? Or are you steady that perhaps this performance will just be going like this now, so we're going to go till the end of the year?
Let's go. So, yes, the best case scenario is going to be some sort of flatness, as you rightly mentioned. But the reality to it is we'll probably see some level of downside pressure because, as I said, it is not the scene of oil prices anymore. Investors have moved past it. They just trying to check the health of the economy generally, and the way we're seeing significant depreciation when it comes to the naira against the US dollar, it's exponential. There is really no investor that would really think, oh, this is not a risk to not pay attention to, So if we continue to see sustained depreciation in the naira against the USD, or against developed currencies, really, developed market currencies, what we get to see is some sort of caution then. The bullishness would literally be similar as what we're currently seeing. And you see investors trying to pull up their funds to understand what is really going on. And that's why we're seeing some sort of activity within the central bank looking to set up some option in the euro bond space, just trying to, we're also seeing OEUs trying to still take up, trying to encourage FBIs and FDIs to come into the market, to just encourage and reduce the pressure really that we're seeing. Because at the end of the day, the optics when it comes to this is really not looking good and looking gloomy. So yes, I'm not going to be in any form bullishness until we see some significant change in our narrative USD value.
Now that you've brought in the central bank into the conversation, how do you think that the Apex Bank has been able to balance this, because CCBN on its part will try as much as possible to create a conducive environment, the ease of doing business, as well as creating a conducive environment for the cost of capital or capital to be preserved. So how do you think that the CBN has been able to, you know, this rebalancing? That's the A part of the question. The B part of the question is, what are your thoughts concerning the FX valuation right now? The Naira at the parallel market is around 545 Naira to $1 right now. Though the CBN, can you hear me, Uchenna? Okay, yes. Though the Central Bank of Nigeria has said, please disregard the parallel market, that is not the benchmark for our FX valuation, but we see the WrestleMania going on in that market space. The I&E window last week also depreciated 412 Naira to $1. So the balancing act from the Apex Bank, as well as is there anything that can be done for our FX to at least be fair? Because people will say, what are we producing? We're a consuming nation, so do you expect your Naira would mirror what is happening in the economy? Take it away from there, Uche.
So Nancy, I'm telling you, what you have just asked me is a whole session on itself. We literally need to sit down and really talk about. There's too many things that have been done wrongly. I'm pretty sure they understand that it has been done wrongly, and whatever their reasons are, we can't really say. I think where we are really as a nation is, I don't want us to say just the central bank, not just the central bank right now. Yes, they have a lot of monetary policy place to implement. However, when it comes to where we are currently, the fiscal authorities need to be fully involved. They need to sit down with themselves, create a plan, a sustainable plan. Yes, you could create some short-term detrimental effects, really, but it's short-term. You're trying to set up a pathway whereby you have a stable currency against currencies that you get to trade with from a day-to-day basis. So this has to be done. There's too many things that we need to set up. For example, just out the very clear business morning. When we get to produce crude oil, and we export this crude oil, when we get this effect, we still spend this money, a significant part of money, refining the crude oil. You know, so that is a double whammy effect in our regard. So when you say we have high oil prices to take advantage of, we are really not taking advantage of the high oil prices because we spend a significant part paying for refined petroleum products into the country. That is the effect paid on its own. If we cannot set up just functional refineries to close that leakage, what else are we doing? We're not going to go to the nitty-gritty of other monetary policy because you can't even do the basics. You know, so when we start to go into these things and you realize that you can't do the very bare minimum, how do I expect you to really implement very technical monetary policies into the system? So it's a really, it's a sad situation. You know, it's really a sad situation. When they are ready to fix it, when they decide to fix it, we really don't know. But it has to come to the point where the monetary policy authority, the fiscal authority, sit down with themselves, create a synergistic, viable plan that can fix this so we don't get into this kind of place again. You know, so there's too many things to be said, but I know this show cannot really accommodate those things, so I just don't cut it down for a bit.
Okay. I think, Uchenna, just like you've said, we'll look at it subsequently because there's so much to talk about. The way we are going right now, we've got to have, you know, a very holistic solution, just like you have proffered. Thank you very much, Uchenna, for joining us on today's edition of the program. Have a lovely week. All right. I've been speaking with Uchenna Minnis, who is the managing partner at Minnis Asset Management Limited. Let's quickly take a break to bring in my next guest.